Welcome to another edition of Cattle Chatter. I'm Susan Littlefield with the American Ag Network, and we know there's an inventory report looming. Don't worry, we're going to talk a little bit more about that. But kind of leading up to this report, Wednesday was kind of a crazy day with some highs taking place in the marketplace. But what's going on with the box speed, and how much of a factor are these two reports of tomorrow kind of weighing in on the trade? Brad Kooima joins us. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. And first of all, you got to look at this yesterday's trade, a Wednesday trade that saw some record highs once again. We saw a pullback on Thursday. Kind of rewind us a little bit. Can that momentum pick back up into the trade?
Yes, yesterday was an extremely powerful day. New all-time high settlements and feeder cattle contracts, things like that. And before I forget, thanks for having me on, Susan. So yeah, very, very powerful day. I think some of it here. Well, every morning there's good news and bad news. Every morning there's bullish or bearish news, whether you're talking about coffee or corn or cattle, right? And that's the way it is, folks. And yesterday I thought that one of the things that and there are times when the market pays attention to certain types of news more than others. Sometimes I say this is, I think, what the market's trading, or else I'm not sure what the market's trading. And what I mean by that is it seems to me like what the big deal right now is cash cattle. We continue to be a steep discount to cash. There seems to be a pretty good growing confidence that the cash is going to be okay this week. We can talk more about that later on here, but I think it's going to be okay in the north. And then I think you have, some of this, it's a self-fulfilling type of a thing. Our best buyer right now on the feeder cattle and the live cattle are the funds. Every time the market makes new highs, the funds trigger another round of buying. And so there is that momentum, that spinning of the market, however you want to call it. So, really solid day yesterday. I don't think anybody should be, too surprised that we're, had a bit of a correction today. We did close well off our lows today. But the market's back and forth a little bit. I do think that maybe the market's attention today was a little less on cash and a little more on box beef.
So let's talk about that. A sharp drop in the box beef. I'd read one said, oh, it's the consumers pulling back. I had another one read, well, it's July. We're supposed to see this. What's your takeaway?
It's probably both, frankly, Susan. The number one reason would be the dog days of summer, the seasonality of the market, right? It's a hamburger hot dog feature here for a while, and people go on vacation. Your fair is this week, ours was last week. I mean, a traditional time for, hey, it's finally we got a week off of this stuff, and before football starts, and right, I mean, all of that. So there's some normal seasonality to that, I believe. But the last 3 or 4 weeks, when I look at that wholesale beef report that comes out on Tuesdays, we've taken a significant hike in some of this stuff, particularly the middles, and especially the high end grind, the 90 and the 93s. So I don't know what I don't care about so much. I'll defend this demand for the beef to the end. It's the best product there is. People are hungry for protein. Our whole focus has changed most dietary to, we need a good source of protein, and there isn't a better one, in my opinion. But having said all that, when you start to get the national news talking about how high beef prices are, and it's in the newspaper how high beef prices are, I always worry that, hey, let's not train our consumer to go, oh, I guess it's high. And I'm not being weird here. I mean, if you get that mindset that good whiskey's higher price than cheap whiskey, right? So I mean, if that's your deal, you're going to walk past the high price stuff, right? I mean, so excuse me. I just don't want that perspective to be what the market's all about. We got a lot less stuff going into the inventory, into the chain. Stuff's going to get higher, and it's July. So I'm really not worried so much. What I worry more about is that the poor margins by the packer, and they are, look at the last while, the boxes have gone down $20, almost $30, and the cash has gone up 10 or 12. That you're going to get more kill cuts. We had a lot of kill cuts last week. We're going to have more kill cuts this week. And so, with that lack of less competition, and that's how it really feels in the South this week to me. That's why I'm not sure the cash is going to be really a ball of fire down there. With the lighter kill, the less need to buy them, then you slow down the cattle market.
Don't want to get political, but I think we're going to have to here for a little bit as we jump into this next two topics. The first one is Ottumwa, Iowa. Speaking of headlines, and this is pork. We don't talk pork during cattle chatter, but what happened at the Ottumwa, Iowa plant very well could happen anywhere in the U.S.
I was surprised that the market didn't seem like to want to talk about it. I mean, well, I'm talking about the market, but I mean, when you do what I do this long, you're kind of networked into that, right? And then social media, of course, is exploded with throwing around, particularly if it's bad news. It seems like they can't wait to share that. But I was surprised there wasn't a lot of chatter about it, but there was some chatter. Yeah, that's pretty good connection, huh? Cattle chatter. Yeah,
I like that.
yeah. I'm expecting a raise.
Okay.
The the story is that this morning at a JBS hog plant in Ottumwa, Iowa, 200 of the employees lost their work visa, and we've been promised over a couple of times here that none of this immigration, these stricter policies, that's not going to impact agriculture. We don't want to specifically mention packing plants a couple of times, right? And now here's a packing plant that it's impacted by. So it that scares me, and I don't think I'm being political at all. I mean, I'm all for doing what's right with immigration, right? But we do need to be paying attention. If this indeed becomes a little more of a snowballing type of a thing, it'll be difficult to maintain normal hours if we don't have that type of workforce.
All right. Political section 2 is the fact that Brazil and the tariff is just around the corner. And you and I were talking before we started the program. There doesn't seem to be any backpedaling going on when it comes to Brazil.
No, if people listen to us on a regular basis, that when this original story came out, I said, you know what, I really would be surprised if they don't backpedal on this tariff talk, this deadline. Every other deadline's been kicked back, whether you're talking about the North American stuff or if you're talking about China. I think that one's been slowed down a couple of times. And usually it's, well, we're making progress and we're going to get along and we had a really good talk and yada, yada. And then we delay the tariffs. But I believe that there are people and algorithms and funds, I think, that are long futures because they believe that this is going to happen. And hey, they're maybe smarter than me. I don't know, but we only have 1 week left now. And so if there isn't some backpedaling done next week, it's going to be a little more reality. And I do think that there's what I call headline algorithms that trade certain phrases and terms words that go together. We've talked about this before. And I believe there's even a little bit of that, in talking about tomorrow's cattle inventory report. So 76% tariff. If that doesn't slow down some of the grinding meat coming in, then I'd be shocked because that's what will go into effect if nothing changes on August 1. So that's another, I think, bullish leg underneath the table. And you might get a negative reaction if indeed they do backpedal it next week, which if I still was a betting guy, I would guess it would get backed up. We'll see.
All right. Inventory reports, something we haven't had for 2 years during the month of July. You and I last year at this time, we're talking about the frustration and the cost was just minuscule compared to some of these other reports, but we're getting it back, but we're going to have to do a comparison of 2 years ago. So is it really a true comparison?
I think you're partly responsible for getting it back, Susan. So kudos.
You and I both, right?
Yeah, I'd like to take a little credit, sure. I mean, but this show and a couple of others were certainly a sounding board for me, some of us anyway. That is ridiculous. I crawled right to the top of the food chain finally to say, they needed to allocate $50,000 to do the report. $50,000 in the USDA budget? You have got to be kidding. Anyway, okay, that's old news. We got it back. But the trouble now, or the challenge is going to be for us, number nerds, is we don't have anything compared to. All these reports are compared to last year, right? And just like the on-feed report, 99% of cattle on feed compared to a year ago. Well, if we don't know what there was a year ago, so I've been going down this little merry lane already of scratching numbers down, trying to figure out. So the January report, I've been trying to figure out calf crop because I think that all the other numbers are good numbers and important, especially heifer retention. I want to know, but trying to work through the calf crop number. So what if the guess is 98%, give or take, of 2 years ago. So we know 2 years ago. We know what the USDA guessed in the January report for the inventory report. So I'm kind of trying to benchmark a little bit where this is at. If it comes in at the guess at 98%, our calf crop would still be lower than it's ever been before. at least in modern history since 1951, and lower than what they said it was going to be in 24. It looks to me like. So, stay tuned. I'm looking forward to maybe trying to get down and dirty with some stuff here. Talking with you tomorrow, but I'm going to try to do my best to spin up the old adding machine here and come up with. See, the other big thing about the inventory report, Susan, is what you often react more to is the revisions, which is frustrating as an analyst and as a producer, where they go back and say, oh yeah, I guess there was less cattle, and they go like, thanks now, so we'll see once we have to, base that on if they revise the numbers or not, or if they revise the cow herd numbers or not a little bit. Cow slaughter has been way down from the last 2 years, way down. So we are getting a calf out of a lot more. We're saving a cow to have one more calf, it would look like to us. But it should be fun stuff to talk about. I don't know. The cattle and feed numbers are probably going to be, the 98. If I had a bet, 98% placements. Texas is going to have another record low placements. I mean, the border's been closed all but 5 minutes, right? I mean, so could that number be less than 98? Wouldn't surprise me, so we'll see once.
Always better to have this report. You and I were talking about this earlier, and we had a cattle guy from the northeast part of Nebraska saying it's good, right, to have this after the markets close versus grains during the day. I, of course, knew your answer to that, and that was most definitely yes.
Most definitely. Nothing annoys me more on the grain side with those 11 o'clock reports. There's too much data to come out. You don't get the data on time. I mean, we buy as high priced and sophisticated computer equipment as we can out here in Northwest Iowa. And sometimes I'm sitting here waiting almost a minute to get the data after the market's, gone up 8, down 7, up, baloney. Let it come out at 2 o'clock. It plays into the algo's hands of volatility and all that stuff when you have it. Let the report come out when it's closed. Let us look at it. Let us analyze it. Let us come up with a game plan for the next time when it gets open again, not during the session.
Last, higher in the north, lower in the south. Is that what your cash thought is?
Steady lower in the south. It almost feels to me like a little bit of trade that they've had. Doesn't seem to there's a lot of competition today down there or this week so far in the south. We'll see. Fed Cattle Exchange had some 231. There was a little bit of 232. It might get back to steady there. Everybody's asking higher here in the north. We don't have a big show list here. We don't have a big supply. We're super current. We got leverage. And we think we got a couple packers that probably need cattle, Susan. So I'm going to think that we could be a couple 3 higher here in the north. Maybe test 245. We'll see. We'll know by tomorrow, I guess, when we do this.
All right. Well, quick note to everybody. We will be having a special edition cattle chatter that'll be up on Friday afternoon after the cattle inventory report. So be looking for that. But most importantly, how do folks get a hold of you guys, Brad?
Excuse me, kkbtrading.com, but much better if you give us a call, 712-722-0023.
All right, that's another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.